We're going to do a brief video on gold technical analysis for October 11th, 2022, and stick with us till the very end and we'll give you some gold algorithmically generated entry prices. We've got a daily chart here with a 5-day moving average in green, a 20-day moving average in red, and a 200-day moving average in blue. We can see gold's been in a bear market since about June, early June, mid-June, and it's still in a bear market. We can see today we had a good sell-off on gold. Today's the 10th of October, and we had a significant sell-off down here from last week's highs. Basically, gold is trying to find a place where people will buy it. Around this price that we currently hit today, this low, the 1672, and probably a little bit lower, as low as the low 1660s, is where I expect to see people step up and start to buy gold, and then maybe drive gold back up here at least to the 1720 level and see if we can get some buying going on this. What has to happen is, you'll notice that the green 5-day is above the 20. That's a good sign for a little rally in gold. We need to get gold, the gold closing price now above the 5 and above the 20. In order to do that, we need to catch some support right in here, the 1662, 63 level tomorrow, the next day at the latest, and start to push gold up to get more optimistic people behind that and continue to push it and maybe get us up here to the 1750 level. Is that going to happen? I don't know. It's just an opinion, all for entertainment purposes only, but that's what I see happening with gold if we get support here tomorrow or the next day. This swing low, this bear market low put in September of 28 at 1622, that's not that far away from where we are. We're 1622 today, we're at 1672. Seems like a lot, 50 bucks. It's not that much, especially with all the things that are going on in the world. So we could go down here and put new lows if we don't get some support here. So I'm looking for some support here this week at about the 1662 level, and then we'll see if we get a rally from that. If we do not get support at 1662, I think later this week or early next week, we're going to go down here and challenge this 1622 again and see what happens. But right now, it's a little too early to say if that's going to happen. We got a good bear market rally here from short covering rally for 2 weeks ago and early part of last week, and now we need to have some buyers come in, pick it up, and drive it up even higher. So we'll see if that happens. Just my opinion for entertainment purposes only. Let's go down here and take a look at algorithmically generated gold prices that are put out by RBAM research every morning. Here we are for the 11th tomorrow morning, putting out buys at 1640, 1662, all the way up to 1671 for the 20-day. These are 1, 2, 5, 10, and 20 trading day holding periods. And consistent with my analysis, you can see here in the mid-range, they're looking at 2-day holds of 1662 and so forth. It gets down here in the 1640s, they're looking at 1-day holds to get in and get out. So keep in mind, these are all for entertainment purposes only. You trade at your own risk. Of course, you have to do your own analysis, but that's what we've got for you tomorrow. Buys from 1640 all the way up to 1671, depending on what your holding period is and what your own analysis is. Keep in mind that you can get all of these every morning before 7 a.m. at rbamresearch.com. No credit card required. Absolutely no cost. There's a link in the description below. In addition to gold and the other most liquid futures, we trade 190 stocks, or excuse me, we cover 190 stocks. We cover the major forex pairs and BTC crypto. Get them all tomorrow before 7 a.m. by signing up tonight. No credit card required. Link in the description below. If you like this video, please click the like button. If you want to subscribe, please do that as well. We'd love to hear from you in the comments section. And keep in mind, everything you've seen and heard on here, including our entry prices and my commentaries, for entertainment purposes only. You have to do your own analysis, and you definitely trade at your own risk.